Now, sticking with this Micron situation, you're invested with a lot of Chinese companies. You've been a long-time investor in China as well yourself. So how are Chinese investors looking at the U.S. market as a place to put their money amid all of these political tensions? Has anything fundamentally changed?
Well, Selena, there's four things going on all at the same time, which is fairly unusual. We have the Trump tariffs, the first one. Second, you have CFIUS, which is the government really double-checking any Chinese company buying a U.S. company in a very rigorous way. The third is the sanctions, the whole Qualcomm, and then also now ZTE and now Micron issues. And then the fourth is, China also doesn't want a lot of the RMB to be flowing into dollars, but they want to control that. And so what you're seeing is the confluence of these four forces all happening at the same time. And it's creating a situation where, it's much more difficult for Chinese investors to invest in Silicon Valley.
And when you're talking with investors in China that you could potentially co-invest with, what are they saying? Are they deprioritizing the U.S. as a market?
Well, I would say that for sure the second-tier financial institutions and tech companies have largely slowed down their investments in Silicon Valley. The first top-tier, companies like Baidu or Tencent, still have some ongoing activities, but compared to a year and a half ago, it has slowed down.
Okay, and now in terms of the Committee on Foreign Investments in the U.S., CFIUS, which you mentioned earlier, this could actually stop specific minority investments from Chinese VCs. Are you concerned about the impact of that on the deal-making landscape in general?
Well, first, for us, DCM Ventures, we get 99% of our capital from U.S. and Europe, so it doesn't really affect us. But I do think, some startups do have to worry if the new backers have Chinese government money. They need to be very careful, and also. There's no question that the CFIUS is slowing down a lot of M&A activities, particularly around semiconductors and core technologies that a lot of Chinese companies have been coming to Silicon Valley and buying.
Right. I actually spoke with several entrepreneurs recently who are worried about this chilling effect. They say raising money is already difficult enough for a startup, and if there's a chance that your money is going to be rolled back by CFIUS, they just don't want the money at all. I mean, what's your take on that?
Well, first of all, CFIUS only kicks in on an M&A situation. So, there is a possibility that you take in money now and maybe, you actually have those Chinese investors sell out in the secondary before a merger. That's possible. But on the whole, I do think that particularly we're not really talking about these mobile application companies. We're really talking about hardcore semiconductor AI technologies that really need to be careful.
Now, looking at the actual numbers in terms of Chinese investment in the U.S., it actually has been falling to the lowest level seen in 7 years. That's according to the Rodian Group. Now, there's a few things at work there, as you mentioned. There's the domestic Beijing capital control policy, regulations here. Do you think that trend is going to reverse itself anytime soon? And where's all that capital going instead?
I think given the tension right now with the U.S. and China and with all these confluence of tariffs and sanctions, I do think that this situation will probably continue until many of these tensions have resided. I really think that we are walking into a precarious situation.
And do you think that a lot of Chinese companies are looking at U.S. expansion in a different light? It seems like Alibaba and Tencent have been refocusing a lot of their attentions to the China market, Southeast Asia.
Well, I think the companies that already bought properties in the U.S., like Wanda buying AMC and then Tencent buying a few game companies, I think they are committed to the global expansion because at the end of the day, for Chinese companies to grow beyond their domestic market, U.S. is a very important market to them for the globalization strategy, and so that will continue. I think it's just that the entry point has been, shrinking a little bit over the last few years.
And now one of the key concerns of lawmakers is this intellectual property theft, forced transfer of technologies. When you're helping U.S. companies expand into China, have you ever come across those issues?
Not very much. I think for startups, they are in a situation where they want to, sell their technology. as many ways as they can. And because they're still very small, it doesn't come up on the government radar very quickly. It's really only when they become large public companies that it becomes an issue.
And so using Plenty as an example, that's a company you've invested in.
Sure.
I've been covering them for more than a year.
Yeah.
They are US-based, have a lot of IP to protect in their vertical farms, but they're looking at China as one of their biggest markets. So how does a company like that approach expansion into China while protecting themselves?
Right. I think there's many ways. One is to potentially go into China through Hong Kong, where in Hong Kong, both the laws and the business laws and currency exchange is a little bit more fluid. I think that's one way to go about it. And then the other route is to find the right partner. I think when you find the right partner who has a track record of having very clean, IP issues, they are good players. Now, of course, there are some bad players in China, but there are really good role model type companies that we can work with to expand into China.
And looking at the bigger picture here, do you think we're entering a world where the China and US tech markets are increasingly closing themselves off from each other, creating these sort of parallel ecosystems?
That kind of a sandbox already existed. For example, Facebook, can't really practice in China, and it's certainly have been going one way. I think what's interesting now is, does it go two ways? And if it goes two ways, does the war escalate? We don't know yet. But certainly, the Chinese market from a startup perspective has been a sandbox that's been relatively protected. And the question is, will it continue to be? And then vice versa, will US create a sandbox against Chinese investors? And obviously, CFIUS process issues is one of the many ways in which US is creating that sandbox.